Yeah.
Okay, so so we'll go through the solution. We'll do it in Excel, and see where we get to. So we're just going to do the solution for the year 1, right?
All right, so I'm gonna start with where we normally start, which is column D. That's the payable. And so I'll just go through the problem, and the first facts we have is that the pre-tax book income is $5 million, and since the workbook is on a debit credit basis, it's a credit of $5 million. So everyone is good with this number, right? All right, so what's my permanent M1 adjustments? Base. What? Penalties?
Penalties.
Yeah. And that's an add back to the tax return. So it's a credit of 50. And then my next permanent adjustment, I think, is meals and entertainment, right, of 80,000, but we only need to add back 50% of that, so it's 40,000. All right. So any other permanent M1s that we have? Yeah. That's also an add back, right? Okay. So that would be. So everyone is good with the permanent M1 so far, right? Yeah? Anyone disagree with this M1s? Alright, so then I'll go to my temporary. So unless otherwise stated, I'll assume my beginning temporary M1s is beginning DTA or DTL is 0. So I see a bad debt reserve of 45 grand. It's an add back, so I'll put a negative 45,000 here. And then my next one, book depreciation in excess of tax. Is that an add back or deduction?
It's not back.
Right, exactly.
Most of the cases is a subtraction, but this time because the book is higher than tax, it's an add.
Yes, you're right on point.
Still, yeah, no.
Okay, so now I think is a little bit confusing part, which is the non-qual deduction. Oh, why is this keep?
You can hit the bottom one.
This one?
Yeah.
Okay. All right. So, what do you think I should put here in this cell? D21. Yeah, because that's the deduction that we can take on our current year tax return. So that's what we're going to take. I'm putting it as a positive 35 because that's a deduction and it's a debit. Yeah. Yeah? Do anyone have a question over there? No? Okay, I'm going to keep going. All right. So because previously my book has recorded 60,000 of expense related to the current year deduction. So my deferreds will reverse by 60,000 instead of 35, right? And then I will have a shortfall of 25 grand, which I will put in the APIC column. I think in the problem we're assuming we have sufficient APIC pool. So I will expect this not to affect my tax rate when I do my rate reconciliation. Is everyone following this step? Yeah? All right.
That's the right, 25,000?
Yeah. So this makes sense to everyone so far? Okay, good. Now I will switch to my states because until I figure out my state tax deduction, I cannot figure out my final federal current year taxable income.
That's a
Because
good point, because I could tell walking around, some of you guys were doing Fed and state all at the same time. You're gonna get yourself all sideways when you do it. Get one right first, and then
Right.
move to the other one. And I know it's tempting, especially the way Anna started in the federal section, but she was only doing that just because the formulas in the state side link. I mean, if it's more helpful for you just to go in and override a formula, that's fine, right? But don't try to do multiple jurisdictions at the same time. It's just gonna mess you up.
So the reason there's 60,000, basically, it was 65,000 that was written off, so it's 30, that's why you get to 25,000, right?
Well,
It says previous 1, 2, 3R expense associated with the, that's the difference between the 60 and the 35, right?
yeah, so because on my deferred schedule, I will have a $60,000 DTA at the beginning.
You took the 60,000 in the previous year.
Right, we added back the 60,000. And we will expect it to all reverse by the end of the year because all of those stock options are exercised in the current year. Okay? Okay, so looking at my solution, I think my solution is a little bit off because my non-deductible penalties in the solution is wrong.
So I think you're doing good.
Huh?
You're doing all right so far.
Yeah, this one is right, but my solution is wrong.
Oh.
Oh, sorry. Sorry, I'm looking at the RTP. Never mind.
Okay.
Yeah. All
What
right.
she sent us is wrong, what she did on the board is right, she's saying, right?
Yeah, I think this one is right.
So far, we're doing great.
For this, then I'll come to the state and come up with the state rate. Can someone tell me what you got for state and let me know how you did it? Okay, I also got 8.55.
But
So
it's all you do is just multiply one times the other and then add them together.
exactly. So I'm gonna do that right now.
Let's do that up there.
One thing I can do right. I can do two things. That's why my wife
All
married
right.
me.
Oops. This one is not right. That's not right either. Let me see how I got it. 20%. Oh, there's a formula error. Okay. Alright. Now I got to the right answer for states. I'm gonna scoop over the screen a little bit. So based on here, I got this. Is everyone following me so far?
Yes.
Okay, so I also have a Michigan R&D credit of 42 that will reduce my tax payable. Oh, I don't. Okay. So I'll put it here. All right.
Question about the way that's presented.
Uh-huh.
On here it says it's generated in the current year.
Okay.
I would think if it's generated this year, you wouldn't be able to take it till next year.
Well, usually if you have R&D credit, whether it's generated in prior years or current year, if you have enough tax liability, then you can utilize all the R&D credit. Yeah. That's the case for federal, California, most of the states, I would say.
I guess, like I said, when you do your study,
Mm-hmm. Well, if you're...
it's a 1-year lag.
Only California.
No, I'm not talking about
No.
state taxes, I'm talking about the credit.
Oh.
No, to my knowledge, usually you can use the current year credit generated in the current year.
Okay.
Yeah. All right, so...
Would you, question before you go on.
Mm-hmm.
Now, if there is an NOL, the point is that if you shove the NOL in, and then you would calculate the the deferred on that, right?
Well, before you can take any credits, you should first use your NOL. Yes, that's correct. All right, so I have 399180 as my state tax provision. 425.
Go over two columns.
Where is that?
Go
Oh,
over two columns.
that's my current, but 399180 is my total state provision based on this schedule.
Can we see
Right.
the top line, what the top lines are? Go up. Yeah.
Here?
Yeah, that's what I mean, okay.
Okay.
Can you split the screen?
No. All right, so I'm going to next go to the deferred tab for state because there is one important beginning balance I need to account for, which is the non-qual. Remember, before we exercise the non-qual stock for this year, we actually had a beginning DTA of 60,000 because in the prior years we already booked the 60,000 expense on our book. So that means in the prior years we already added back 60,000 related to the non-qual that's exercised in the current year, and that's why I have a beginning balance of 60,000. And that's the same for federal. I have a 60,000 beginning. And after we exercise the non-quals, then I will expect my ending balance to be 0. So is this point clear with everyone, or you're a little bit confused?
We're starting from line 9.
Line 9? You mean here? Well, this kind of just flows in the model, because for federal purpose, remember, all the state DTA movements will have a federal effect. So that's how we're accounting for the federal effect of all the state defers. But what we really want to make sure that gets entered at as the beginning balance is the non-qual beginning balance of 60,000. Because after the current year exercise, we won't have a balance relating to those stock options that we exercise in the current year. So am I at a good pace where you want me to slow down, go faster?
No, you're good.
Okay, good. All right, so the next thing that I have, now that I have the state provisions, it will automatically flow to the federal column. This is how the model works out, but currently you can rely on the model, but it would be great if you can also try on your own and see if you can get to the same answer using your own way of calculation. Yeah. And then we accounted for the state credit, but federal also had a credit of 47500. So I'm entering it now, so I have a federal current tax payable of 1.7 million and a total tax provision of 1618787. Is everyone with me right now? Okay. Yes? No? All right, let me split the screen.
You make it seem so easy.
Oh, well, it's not too difficult.
Did you pass?
Barely. All right, so this is the first year.
So let's just pause for a second. I know you guys got a number of different answers, so is everyone feeling good, like they can explain why their answer was different from this? Or better yet, why they should have
I just have a question. Why did you put the benefit of state and the temporary items? Or does that go in later?
You mean this here?
You pay the state tax, you get a benefit. That's why it goes there.
No, but so why didn't you, no,
Oh,
Where's that coming from, that 24,368?
this is a plug. So,
So that's the hard row, right? Row 15, then that's the difficult one. So if you went line by line, let me just kind of slide in here a little bit. You're totally fine. You don't have to move.
oh, that's fine.
So this 425, that's your federal deduction for state taxes that you accrued this year. So that 425 is going to link to that 425, right? So we know if we pay 425, we deduct 425. This 24 in the state provision is us saying, in the future, we're going to save state tax.
So 24,000.
24,000.
368.
We're going to save $24,000 of state tax, which means in the future, we're going to get 24,000 less of federal deductions. Right? So those two numbers just pull from the state total. And then on the provision, remember, if your expense is $399, for every dollar of state tax you pay, you get a federal benefit. So that $399 just pulls up here, and we get a federal benefit for the state provision. And now on the APIC, this is confusing, especially given the direction this is going. But you have a shortfall of $2,000 for state, right? Well, remember that everything you do that is state has a federal effect, and so that 2,000 pulls into the APIC column for federal. So when you originally set up your your state and federal deferreds for stock comp, you did it as state plus federal, and you in your federal number you put federal effect of the state. And now we're just unwinding that through the shortfall. That is super confusing, and I think probably the easier way to see this is if the numbers were flipped and if we had an excess benefit, then what would happen over here, so say that this deduction is a bigger number, say it's 100,000. And let's say that, ooh, no. Say it's 100,000 deduction, and say my deferred is still 60, right? So this APIC would have to be 40. I would credit APIC. If I had an excess benefit, I would credit APIC because I would say I save tax and I'm going to credit APIC to show that the benefit of that extra savings went to APIC. And if I save tax on states, that means I'm going to save less federal tax because I'm going to get less of a federal deduction, right? So if I save $3,400 on my state taxes because of an excess benefit, then that means over on the federal side, I get less of a federal deduction. That 420 right there, that's lower than it would be without those excess benefits, and I'm going to blame APIC for that.
Is there a change in sign?
Everything is the reverse sign. So whatever you see in state, the flip is true on the Fed side. Okay?
That's only if you have an APIC total, though.
Only if you have an APIC pool. I mean, if you didn't have an APIC pool, I mean, Anna can show you how to do it.
Okay.
Some of the question in the back. You want to do that?
Just assume we don't have APIC pool?
Yeah.
Okay.
But you got a change in sign of that 24,368. I mean, you see that at the bottom?
Yeah.
Then you would come over there on the federal side, you see credits.
Right, but don't kid yourself into thinking it's always just the negative sign and it's just an automated thing that you can't explain. You need to be able to understand it, process it, and be able to articulate it. Because there'll be times when, for some reason, it's not working right, and then you'll be like, I just
But you numbers in.
Or I guarantee you, when you pick up someone else's provision model, it won't work this way. And then you'll be like, where's the thing where it takes these signs? Somebody will be like, what are you talking about? And yeah, they won't recognize the way in which I presented it here.
Right, so if everything remains the same but you don't have the APIC pool, then we cannot debit the APIC by this amount. Instead, that 25 grand will go to tax expense. Right?
Yeah.
And the same for federal. And then on our RAREC, we will have a shortfall of non-qual exercise because we didn't have an APIC pool to absorb the debit that would have gone to APIC.
What I was telling somebody in the back is, you have to keep thinking, if you're going to use this Excel sheet, keep thinking of every row in here as its own balanced journal entry. Don't get caught up as if this is like some big input field. Think like, I should be able to explain every row independently as a balanced journal entry. That's the way to think about it. Because if you can't explain why a row is a balanced journal entry, that's not good. You should stop and figure it out.
Alright, so keep going. On this tab, I kind of have a summary on the bottom, and it says my total provision is 2017967. Then I will want to go to my other tab just to make sure that this is correct, because my other tabs have many checks trying to see, okay, everything ties. The first tab I will go to, well, let's just go through tab by tab. So for federal, we already said the only beginning balance in this problem is the $60,000 relating to the non-qual. And then I will expect my current year change ties to my current year change on my payable tab. And then 91221, they tie. It's great. And then my state tab, this 24368 also ties to the change in deferred column on my payable tab. So I'm also good there. Then I want to go to my RAREC. And here we go. The total provision is 2017967, which also, well, not good. There's an unallocated amount of 245,500. So let me see what's going on. That's good answer. Okay. Yes, exactly. So let me add a column. I'll change this to ISO. And this is oh. Okay. So now we tie and everything's good. Then we go to, I'm not gonna go through this tab in detail. It has more to do with disclosures. And then I want to check that my accounts, tax accounts, also tie to what I have on my other tabs. My total tax expense here is 2017967, which ties to every tab that we've seen so far. This deferred tax, I wanted to tie to the deferred tax change here. And it also ties. That's good. And total payable, I want to make sure that it ties to my payable on my payable tab. So everything's good on the tax accounts, and they should always balance. One of the hardest things for me while I work on provisions is making this balance, but it's a fun thing to do. Trying to figure out where I went wrong. Alright? So everyone's pretty comfortable with year one so far? Yeah?
So,
No?
can you go to the rate rec?
Yes. What are you getting for your...
Oh no, there was a calculation. I just erased it. I got that now.
Oh, okay, great. So this is what we'll have for year 1.
Just pause there for a quick second. So anyone else have questions on this? I know it's sometimes hard to keep up and compare your calc to the new calc.
Can I just see the journal entry one more time?
Sure. Scroll down. All the beginnings are 0, so.
I can see your calculation again, this is all for the state rate. It's like G.
On the first tab, payable tab, or this tab? Okay. Are you done with the accounts
Yes.
tab? This is just derived by multiplying the apportionment rate with the tax rate for each state and then adding them together. Okay. So if everyone's good so far, I will go to the provision, return to provision true up.
Can you click on the rate rec one more time?
Sure.
And click on the unallocated cell, or at least the D47.
This is just a formula. We don't want anything in the unallocated cell.
Unallocated means you did it wrong and it's forcing it to that.
Alright, so it's forcing me.
What are you getting for the state column, the state, I think cell,
259, 467.
okay, that's correct.
14. Everything that you have up there I have here, but I have the 8750 unallocated.
How can you
Interesting.
do that? The numbers, all the numbers are the same. It should work.
Let me add it up. Okay, I think Jeff is coming to help you. All right. Here. Did you want to see the top, the deferred states, or just the current year changes? Sure.
So the credits, R&D, you didn't even show them on here.
Well, the R&D, since it's generated in the current year and utilized in the current year, it doesn't get to the deferred schedule because the offset is offsetting my tax liability. Yeah. All right. So I'm gonna go ahead and work on the RTP entries. All right. So my first difference between the actual return and my provision is the non-deductible penalties, which should be 40 instead of 50. So I'm just gonna work on this same tab, same schedule. Sorry, same workbook with the new assumptions, and then I'll book the entries in the accounts tab because it will be the easiest to do that.
And I'm sorry, are you emailing this?
Yes.
After?
Yes, I'll email the solutions out. So I will change this to 40. All right. And then I have another difference in the depreciation. Originally I said, okay, it was 300,000 add back. Now it's changed to 280,000 add back. All right. Then the third one is a change in state apportionment, which will affect our blended state tax rate, which will affect our federal provision, state provision, everything. Okay.
You're doing a true up, right?
I'm doing the true up, but it's the easiest to just work on this workbook, and then this workbook will give me the correct entries, and then I can just book the additional entries needed for the true up. Does that make sense to you? Okay. So 60%, 20%, 20% is what I will have as my actual state tax rate. And it went down, which is good for us. That means our state tax provision will go down.
Smaller deduction from the federal.
Right,
Smaller deduction.
exactly. So my federal benefit of state will decrease as well. Alright, so after booking all the adjustments, I see that my total tax provisions decreased significantly to 1.998 million. 998 million. So everyone got this provision number? No? Can someone give me an answer so I know that you're following me? Okay. Okay, so no one is following me.
Well, wait
Do
a
you-
second. Where are you getting the true up numbers? The problem is it showed true up numbers. Where?
On the bottom of the, so do you see?
Oh, I'm sorry. I'm blind.
All right, so you see it now.
Yes.
Okay, cool.
It had to kick me.
But does this make sense to people that it went down? R&D credit? Oh yeah, for federal. Went to 48. All right. So it went further down to 1998348. Where?
Yeah, right. By where?
All right. So I'll do the same check. I'll check my re-rec first. And looks like it ties. And my deferreds. Okay, also ties to my deferreds change on the payable tab. And then my federal change in deferreds, A5237, also ties to my federal change in deferreds, A5237 here. Alright, so in order to get the adjusting journal entries for the true-up, it's easiest to have the Alright, so I'm going to note down here what I booked as my provision entry in my previous workbook. I happen to have that with me. So I think previously this is my journal entries.
How much you want to take like that?
Alright, so I also want to check if my previous entry balances. So I'm gonna add them up and see. It doesn't. Not good. Oh, okay. Alright, so in order to get my true-up entry, I want to use what I have previously, less, no, I want, what I have, okay, I want to use what I have as an ending balance less what I have previously, because I want to get to the ending balance, right? So these entries will actually be my true-up entries. And I'll adjust these accordingly to follow what I have there.
Made my day.
Alright. And it still balances at the end. We always want to make sure that our adjusting journal entry is balanced. So this will be the answer. So does this problem make sense to everyone?
Yeah. But ask me during an exam and I'll tell you no.
Okay. I will send the solutions out to everyone. Huh?
Do you have a format that you created?
No.
Yeah, for this problem, I didn't prepare the
But I
solution.
think like the solutions
Yeah,
for
no.
exercises 2, 3, and 4 from class 5, none of that's in Excel. I don't think. I think that's in our normal kind of just like a PDF thing.
Hmm?
Oh, they're gonna send that.
Yeah, we'll send all those.
Huh? Didn't we already send them?
But yeah, I think if you play with the program, it's not bad. Actually, more.
Yeah, so
You have to make sure that.
Wait, hold on. Anna?
I mean, Anna do have some as a second or something, but it's different from
Hey, I keep telling you, don't get wedded to the Excel file. I mean, that's it. I understand like the natural instinct to want to, have exactly what she's working with, but trust me, that's the wrong way to think about it.
yeah, if I were you, I would create my own template.
Exactly. I know that sounds crazy, but I'd almost like zero out everything on the payable tab, take all the formulas out, put it in yourself, make yourself balance each of the journal entries in the rows, because then you'll think about it, as opposed to like, the formula. Right? That's a bad answer.
No, I agree.
Could you make a solution like by writing so we can follow like the laundry? Sometimes you do that. Oh,
Okay, maybe. I'll try.
She wants a.
No guarantees.
She wants the walk down solution. That's not an Excel. Is what she wants.
Because I do try to use my own formula, but then in the before stage one, I got different number, so the following are different. So now what I can do is just to write down Anna's number and then try to figure why I have the different number with that.
I'll try to make some time to send around that solution with me doing it in my handwriting. To like give you guys credit for like you doing it for me or something. Alright. Alright, what else do you want to know?
That's it.
What's on your?
That kind of stuff on it.
He says he's going to get all of it a B at least. What do you want? They're definitely doing things. Breakpoint average is a B. No one at the Lloyd's is not going to hire you because you got a B.